Hey, what's going on, guys? It's Jaguar, and this is my playbook trade for January 15th of 2020. And today's trade was a one time framing trade. So I'm not sure exactly what I call the setup. That I just, when I'm in my journal, I just mark this as a one time framing setup. So first of all, let's talk about what one time framing is, because that's a term that for a long time I heard that thrown around and I didn't even know what people were talking about. But it's a very simple concept, and all that is based on the time frame in which you're looking at the market, whatever time frame you're looking at, whether it's a 5 minute bar or even a 15 minute bar or whatever. It's when the subsequent bar is not coming back to test the lows of the previous bar. So as you move up, the next bar is not violating the low of the previous bar. So when you're looking at your charts and you see a 45-degree angle of the market just going up in a 45-degree angle, that is typically one time framing. That's what people are referring to when they say one time framing. So for me, when I'm looking at a trade like this, I'm looking for at least 3 bars. I don't think one time framing is valid without the minimum of 3 bars. And I'm looking for a situation where I really believe that the market is going to continue on to a certain level. So, one time frame can occur when there's kind of that slow, gradual grinding in the market. And you see a lot of volume be executed at the highs of each one of these bars. And it seems like all the shorts that get involved, they keep on getting squeezed out. And, people are, taking profits, but then getting right back long again without letting the bar pull back too much. So essentially from a context point of view, this is actually a video in the background. I'm going to show you guys how this played out. So I don't want to drag another chart over here, but you guys can go back and look at what the market was like this morning. And to me, after these first 3 bars, I already was saying to myself, the market looks poised to take out yesterday's high, which is this green line right here. So that was my synopsis. I thought we'd probably go retest those highs because we were in an open drive type of situation. So one thing I should mention as well is I'm looking at these 25,000 volume bars, and I also trade open drives using just this second bar right here. And today didn't give me the signal for a setup on that type of open drive trade. So as you can see on this bar, we have the 25,000 volume here, and then we have the delta here at the top. And when I'm looking to get in very early on an open drive trade, I'm looking for at least 10% of this bar's volume to be one-sided. So I'm looking for 2,500 or more contracts of this 25,000 bar to be, positive delta. So if this was 10%, I would be looking to get in as soon as this next bar started. But the fact that this is 1,700, that was not my setup today, so I couldn't get in right there. However, then I have my eye open for one time framing, because one time framing often happens in an open drive situation as well. So hopefully that makes sense in terms of context. So where I'm looking to get in at is I got in here, and so I got in before this recording started. So don't hate me on my recording skills, but I actually forgot to start the recorder until I was already in this position. But I was watching order flow, so I kind of knew where I thought I could get a limit order filled at, and you see there's a lot of size trading in this area. Excuse me. So you can see there's a lot of size trading in this area. And a good rule of thumb for me is if I want to get involved in a one time framing play, I'm going to try to get filled where there was, the most volume, whether that's the VPOC or somewhere near the VPOC of the previous candle. And my stop essentially is below the low of that candle. So for me, I have a stop loss here at 87.25. This was actually just because my automated strategy put that stop there. But mentally, I was going to take a stop at 88. So if we violated, this was 88.25 here, this 29 by 0. So I was going to take myself out of the market. I was going to take myself out of the market at 32.88. So very, very tight stop there. So this trade can actually offer some great risk to reward, as long as you're disciplined about getting out when the one time frame is violated. Right? The premise of this trade is based on the market's one time framing, and I believe that we would go and test yesterday's high early on in the market based on the fact we had an open drive. So if we violated this one time framing, I'm going to look to get out, right? Simple as that. So I'm already in this trade, and you can see it's really not going against me at all or anything yet. This was a pretty easy trade to manage. It really never went against me. And even, losing 5 ticks is not, that doesn't have me want to jump out a window or anything. So this is a pretty easy trade to manage. I've been trying to give myself more trades that are easier to manage. So I want to skip ahead here to 6 something. Yeah, like 6:30. Okay, so I pulled Bookmap down here, and this is to discuss my target. So I actually left my target here. I had a 16 ticks target, and that again was just based on my automated strategy. But that was about where I would want to get out of this trade. You can see here on Bookmap where this 1 is. That's actually where it's at. And here this section from 92 to 95 is kind of what I would call layering. It's just not that tight between each other. And you can see as we approach these levels, we kept putting in a lot of volume on the highs. And, we really still had strong buying as we approached, the highs of each one of these, each one of these subsequent candles. So I was looking for 93.25, but I actually got out sooner than that. So let's fast forward here. Let me see how this plays out. I'm trying to show both, but I don't have a lot of, I actually do have a lot of screen real estate here, but didn't want to resize this Bookmap thing because I had this on a different monitor. So you see we were trading here, and this is actually, I was pretty optimistic I was going to get my target here. And then what I became worried about is that, we were starting to sell Did I get out yet? No. I'm going to pull Bookmap back up here. Okay. And so we were starting to sell a little bit, and I thought, we need to get a push up. And I'm just seeing small buying here. And then I saw larger selling come in. And then I'm seeing some small buying coming back, small buying come back. And then I saw larger selling come in. And so I'm starting to get nervous here. And I think I exited the trade right there. Yeah, right as I said that, exited the trade. So I got a 12 tick profit from there. So I got a 12 tick profit for risking 5 ticks. But I do want to show you that I could have done a better job on this. The target in which the target that I had, I could have got. The reason why I was kind of antsy about taking my position off is because I'm trading on one lot, so I'm all in and all out here. And we can get into later why I'm trading more one lots. I'm actually reducing my size recently, and I'm trying to get involved in more trades. So I'm not trying to overtrade, but I think I was overtrading certain ideas. Like I was overtrading breakouts, but I was I was trying to trade breakouts too often. So I've been trying to increase the amount of different trades that I take, but trading with reduced size. So I've been trading mostly one lots, except on my higher conviction plays. So I want to fast forward here to 13 something. Yeah. This is just the final thing I wanted to show you guys is a lot of times the best exits when you're trading momentum plays, at least for me, and something that I've seen this happen in real time, and I started to watch it, and then I saw a webinar by the people at Bookmap, and they had a guest speaker on, and I saw him talk about this concept and really reaffirmed that this does work. And that's when you trade into a whole bunch of size. You trade into that large size. and then maybe we stick around, but that size comes back in. You see how it got white here again? That size comes back in, and we trade away from it, and that size comes back in again. That is a good time to get out of your trade. So if you've been holding the trade for a long time, if size is consistently returning, like whoever sold here wants to keep on selling and they want to keep on selling, that is actually a good indicator of a time to get out of your trade. So I use that a lot of times when I'm looking to hold on to a runner, or when I have multiple lots on and I'm looking to trade the momentum. A lot of times I'm using that technique of where we come in and we break a large size, or break a area of layering or whatever. We trade into a lot of size. The size comes back, and then that's where I'm looking to get out. And you can see this size held through here. Now we went up to 3,300 today, so I'm not saying that means it's over. I'm just saying, if you guys were looking for a exit criteria, and this is one that I use. So that's really all I want to cover today, and hopefully today went well for you guys. So talk to you soon. Bye.